My business partner embezzled $800,000 before a company sale, but he forgot I was a forensic CPA. The buyer's accountant called me at 9 a.m. on a Tuesday. Mr. Mitchell, we found some discrepancies in the pre-sale audit. We need to discuss them before we can proceed with the acquisition. I sat in my home office, 2 weeks away from selling Mitchell Walsh Accounting, the firm I built over 40 years. The sale price, $3.2 million. My retirement fund. My legacy. What kind of discrepancies? Missing funds. Unexplained transfers. Over $800,000 in payments that don't match your books. We're considering pulling out of the deal. My stomach dropped. 40 years of work. About to collapse. Send me the details. I'll investigate. I hung up and stared at my computer screen. I'd been a CPA for 4 decades, specialized in forensic accounting for the last 20 years. I'd investigated Medicare fraud, corporate embezzlement, tax evasion schemes. And now someone had stolen from my own company. I knew exactly who it was. Derek Walsh, my business partner of 15 years. 3 weeks later, I would stand in a courtroom and present one piece of evidence that would send Derek to prison. But in that moment, sitting in my office, I could only think one thing. Derek had made a fatal mistake. He'd forgotten what I did for a living. Before we continue, please subscribe to the channel and turn on notifications so you never miss a story about standing up for what's right. Part 1. The Partnership. My name was James Mitchell. I was 68 years old, and I'd founded Mitchell Walsh Accounting in 1984. I started the firm fresh out of grad school, built it client by client, tax returns, audits, bookkeeping. By 2000, I had 20 employees and a solid reputation in Los Angeles. In 2009, I hired Derek Walsh. He was 35, energetic, ambitious. MBA from USC. He'd worked at a Big Four accounting firm for 10 years. Derek was good. He brought in corporate clients, mid-sized companies that needed complex auditing and tax planning. Revenue doubled in 3 years. In 2012, I made him a partner. Mitchell Walsh became a true partnership. 60% me, 40% Derek. We signed a partnership agreement. Profit sharing, joint decision-making, equal management responsibilities. Derek handled business development and client relations. I handled operations and quality control. It worked for a while. By 2020, I was 63 and thinking about retirement. My wife, Carol, wanted to travel. Our kids were grown. I'd worked for 40 years. It was time. Derek and I discussed succession planning. He wanted to buy me out, but he didn't have the capital. James, let's sell the firm. We'll find a buyer who wants an established accounting practice. We split the proceeds according to our partnership shares. You get your retirement fund. I get mine. It made sense. We hired a business broker, listed the firm for $3.5 million, started the sale process. By January 2025, we had a buyer, Harbor Financial Group, a private equity firm acquiring regional accounting practices. They offered $3.2 million. We accepted. The deal included a 90-day due diligence period. Harbor's accountants would audit our books, review client contracts, verify financials. Standard procedure. I wasn't worried. I'd maintained clean books for 40 years. Then the call came. Part 2, the discovery. Harbor's lead accountant, Sarah Chun, sent me a detailed report. I opened it on my laptop and read every line. Discrepancies identified during pre-acquisition audit of Mitchell Walsh Accounting, January 15th to February 10th, 2025. 1. Wire transfers totaling $387,000 to offshore account Cayman Islands, labeled consulting fees. 2. Vendor payments of $243,000 to Walsh Management Services, LLC. No corresponding services documented. 3. Credit card expenses of $178,000 charged to company accounts. Personal luxury purchases, jewelry, travel, restaurants. 4. Total unexplained expenditures, $808,000, 2022 to 2024. I felt my hands go cold. $808,000 missing from my company. The offshore account. Walsh Management Services, Derek's name. Credit card charges. Derek had been stealing. For 3 years. I called Sarah immediately. Sarah, I didn't authorize any of these transactions. I need copies of all supporting documents, wire transfer receipts, vendor invoices, credit card statements. Mr. Mitchell, these transactions all have Derek Walsh's signature. He authorized them as a managing partner. Send me everything. I'm investigating this as potential embezzlement. Mr. Mitchell, if these funds aren't accounted for, Harbor is withdrawing from the acquisition. We can't purchase a company with unresolved fraud. My retirement. My $1.9 million payout. 60% of $3.2 million. About to disappear. Give me 2 weeks. I'll get to the bottom of this. I hung up and opened my file cabinets. 40 years as a CPA. 20 years in forensic accounting. I knew how to trace money. Time to find out where $808,000 had gone. Part 3. The investigation. I started with the company's bank records. Every transaction from 2022 to 2024. First finding. Wire transfers to Cayman Islands. 12 transfers over 3 years. Each between $25,000 and $45,000. Total, $387,000. Recipient, Stratton Consulting Group, registered in Grand Cayman. I searched for Stratton Consulting. No website. No business registration in California. No tax filings. Shell company. I checked the wire transfer authorization forms. Derek's signature. Notation. International Tax Consulting Services. Fake. Next finding, Walsh Management Services, LLC. I searched California's business registry. Walsh Management Services was registered in 2021. Owner, Derek Walsh. Address, Derek's home address. It was Derek's personal company. From 2022 to 2024, Mitchell Walsh had paid Walsh Management Services $243,000 for management consulting and business development services. I checked our partnership agreement. Section 7.3. Partners may not enter into self-dealing transactions without written consent of all partners. I'd never consented to these payments. I'd never even heard of Walsh Management Services. Derek had created a fake vendor, billed our company, and paid himself. Third finding, credit card expenses. I requested detailed statements from our corporate American Express account, the one Derek used for business development. 2022 to 2024 charges. $47,000 at luxury jewelry stores, Tiffany, Cartier. $38,000 at high-end restaurants, Nobu, the Ivy, Wolfgang Puck. $52,000 on international travel, Paris, Tokyo, Maldives. $41,000 at luxury hotels. Four Seasons, Ritz-Carlton. Personal expenses. Charge to the company. Total theft, $808,000. But I needed more than bank records. I needed to prove Derek had intentionally embezzled funds, not just made business judgment errors. I needed his state of mind, his intent. Part 4, the pattern. I called my old colleague, Frank Rivera. We'd worked together at PricewaterhouseCoopers in the 1990s. He was now a forensic accountant specializing in embezzlement investigations. Frank, I need your help. Unofficially, I explained the situation. James, I'm sorry. That's brutal. What do you need? Help me trace the money. I need to prove Derek knew this was theft. I need evidence of concealment, false documentation, anything showing criminal intent. Send me everything you have. Give me 72 hours. 3 days later, Frank came to my house with a thick folder. James, Derek didn't just steal. He built an entire system to hide it. Frank spread documents across my dining table. First, the offshore account. Stratton Consulting Group is a shell company Derek created in 2021. I traced the ownership. It's registered to a trust controlled by Derek. He's the sole beneficiary. Frank showed me Cayman Islands corporate records. Derek's name buried in the trust documents. Every dollar Mitchell Walsh wired to Stratton went directly into Derek's personal offshore account. He's been withdrawing cash and depositing it into U.S. banks under the radar. keeping each deposit under $10,000 to avoid reporting requirements. Structuring. That's a federal crime. Exactly. And there's more. Frank pulled out invoices. Walsh Management Services. Derek created fake invoices with detailed descriptions of services that never happened. Look at this one. Strategic market analysis for Q3 2023 client acquisition. I checked. No such analysis exists. No deliverables. No documentation. He fabricated the invoices to make the payments look legitimate. Right. And here's the smoking gun. Frank showed me an email sent from Derek's personal Gmail account to his Walsh Management Services business email. Date, March 15th, 2023. Subject, invoice template. Body. Remember to vary the amounts and descriptions so it doesn't look like a pattern. Keep it under $30,000 per invoice to avoid triggering James's review threshold. I stared at the email. Derek had explicitly discussed hiding the theft from me. Consciousness of guilt. How did you get this email? Derek used his work computer to access his personal Gmail. Your company's IT policy allows forensic retrieval of all computer activity. I pulled the email cache from the server backups. Frank laid out the final piece. The credit card charges. I pulled the receipts. The Tiffany purchases. They matched jewelry Derek's girlfriend posted on Instagram. The Paris trip. He tagged himself at the Eiffel Tower with her. None of these expenses had any business purpose. I looked at the evidence. The pattern was clear. 1. Derek created shell companies. 2. Fabricated fake invoices. 3. Wired money offshore. 4. Structured deposits to avoid detection. 5. Used company credit cards for personal luxury. 6. Documented his efforts to conceal the theft. This wasn't a business judgment error. This was systematic embezzlement. Part 5. The confrontation. I called Derek and asked him to meet me at the office. Derek, we need to talk about the harbor acquisition. There's a problem with the audit. What kind of problem? Just come in. We'll discuss it. Derek arrived at 10 a.m. He looked confident, relaxed. Expensive suit. Rolex watch. I wondered if he bought them with stolen money. We sat in the conference room. I closed the door. Derek. Harbor found $808,000 in unexplained transactions. Wire transfers to Cayman Islands. Payments to Walsh Management Services. Personal credit card charges. They're threatening to kill the deal. Derek's face stayed calm. Too calm. James, those are all legitimate business expenses. The offshore consulting fees are for international tax planning. Walsh Management Services provides real services. I can send you documentation. The credit card charges are business development. Show me the documentation. I'll get it to you by tomorrow. Derek, Stratton Consulting doesn't exist. Walsh Management Services is your personal company. The credit card charges include Paris vacations and Tiffany jewelry. None of this is legitimate. Derek's expression hardened. James, you're accusing me of theft? I've been your partner for 15 years. I brought in millions in revenue. Those expenses are within my discretion as managing partner, not without my approval. The partnership agreement requires consent for self-dealing. We can work this out. Let's bring in a mediator. No mediator. I have evidence, Derek. Emails showing you deliberately concealed these transactions. Bank records showing structured deposits to avoid federal reporting. Fake invoices you created. This is embezzlement. Derek stood up. You're making a serious mistake, James. If you accuse me publicly, I'll sue you for defamation. I'll claim partnership disputes and tie you up in litigation for years. You'll never see a dollar from the harbor deal. Then we'll let a court decide. You're 68 years old. You want to spend your retirement fighting me? Just take the deal. We split the proceeds. You get your $1.9 million minus the $808,000 in disputed expenses. That's still $1.4 million. Walk away. I looked at him. This man I trusted for 15 years. Made a partner. Gave 40% of my company. He'd stolen from me. And now he was threatening me. No, Derek. I'm not walking away. I'm going to prove you embezzled $808,000. and you're going to pay it back with interest and criminal penalties. Derek smiled. Cold. Good luck, James. You'll need it. He walked out. Part 6. The evidence. I called Harbor's acquisition team and asked for a 30-day extension. We need time to resolve the financial discrepancies. I'm filing a lawsuit against my partner for embezzlement. Once the court freezes his assets, we can recover the stolen funds and complete the sale. Sarah Chin was skeptical. Mr. Mitchell, we can't wait indefinitely. If this isn't resolved in 30 days, we're walking. It will be resolved. I hired a litigation attorney, Catherine Park. She'd handled dozens of partnership disputes and embezzlement cases. Catherine, I need to file an emergency lawsuit. Breach of fiduciary duty, embezzlement, fraud. I need a temporary restraining order freezing Derek's assets before he hides the money. What evidence do you have? I showed her everything. Bank records, emails, fake invoices, offshore accounts, credit card statements, Frank's forensic analysis. Catherine reviewed it for 2 hours. James, this is airtight. Derek's conduct is textbook embezzlement. I can get a TRO within 48 hours. We filed the lawsuit the next day. Mitchell versus Walsh, civil case number 25, CV 8844. Claims. 1. Breach of fiduciary duty as partner. 2. Embezzlement, $808,000. 3. Fraud, fake invoices, false representations. 4. Unjust enrichment, relief sought. Return of all stolen funds, $808,000 plus interest. Removal of Derek as partner. Damages for harm to company sale. Attorney's fees. Catherine also filed a motion for a temporary restraining order, TRO, and preliminary injunction, asking the court to freeze all of Derek's assets, bank accounts, real estate, investments. The hearing was scheduled for 3 days later. Part 7. The courtroom. The hearing took place in Los Angeles Superior Court. Judge Michael Torres presiding. Derek showed up with his attorney, Richard Bloom, expensive lawyer, aggressive reputation. Judge Torres called the case. This is Mitchell versus Walsh. Mr. Mitchell seeks a TRO freezing Mr. Walsh's assets, pending resolution of embezzlement claims. Ms. Park, proceed. Catherine stood. Your Honor, the evidence shows that Derek Walsh systematically embezzled $808,000 from a partnership over 3 years. He created shell companies, fabricated invoices, and used company funds for personal expenses. We asked the court to freeze his assets to prevent him from hiding or dissipating the stolen funds. Catherine presented the evidence. Bank records, emails, Frank's forensic report, fake invoices. Judge Torres reviewed the documents carefully. Mr. Bloom, how do you respond? Bloom stood. Your Honor, this is a partnership dispute, not embezzlement. Mr. Walsh made business decisions as a managing partner. He had authority under the partnership agreement to incur expenses for business development. The offshore consulting was legitimate tax planning. Walsh Management Services provided real consulting services. The credit card charges were business-related. Do you have documentation proving these services were legitimate? We're compiling it, Your Honor. But we shouldn't freeze my client's assets based on unproven allegations. Judge Torres cut him off. Mr. Bloom, I reviewed the evidence. The invoices appear fabricated. The offshore account is a shell company owned by your client. The credit card charges include Tiffany jewelry and Paris vacations. This isn't a close call. He turned to Derek. Mr. Walsh, did you create Stratton Consulting Group? Derek hesitated. Yes, Your Honor, but did you wire $387,000 from the partnership to your own company without your partner's knowledge? It was for consulting services. Did you create Walsh Management Services and bill the partnership $243,000 for services you personally provided? Derek's lawyer whispered urgently to him. Your Honor, I invoke my Fifth Amendment right against self-incrimination. The courtroom went silent. Judge Torres's face hardened. Mr. Walsh, invoking the Fifth Amendment in a civil case creates an adverse inference. The court will assume your testimony would be incriminating. He looked at Catherine. Ms. Park, I'm granting the TRO. All of Mr. Walsh's assets are frozen pending trial. I'm also referring this matter to the district attorney for criminal investigation." He turned to Derek. "Mr. Walsh, you are prohibited from transferring, selling, or hiding any assets. If you violate this order, you will be held in contempt and jailed." "Understood." Derek's face was pale. "Yes, Your Honor. Trial is set for 60 days from today. Discovery begins immediately." Judge Torres banged the gavel. Part 8, The Reckoning. The district attorney's office moved quickly. Within 2 weeks, Derek was charged with 1. Grand theft, embezzling $808,000. 2. Money laundering offshore accounts. 3. Structuring bank deposits under $10,000. 4. Tax evasion, unreported income. 5 felonies. Maximum sentence, 15 years. The criminal trial lasted 3 weeks. The prosecution presented everything: my testimony, Frank's forensic analysis, bank records, emails, fake invoices, offshore accounts. Derek's lawyer tried to argue that these were good faith business decisions, that Derek believed he had authority to incur these expenses. The jury didn't buy it. The emails showing Derek discussing how to hide the expenses for me destroyed any good faith defense. The fake invoices with fabricated service descriptions proved intent to defraud. The offshore shell companies proved concealment. The jury deliberated for 4 hours. Guilty on all counts. Derek Walsh was sentenced to 8 years in federal prison and ordered to pay full restitution: $808,000 plus $340,000 in damages, lost interest, harm to company sale, attorney's fees. Total, $1,148,000. The court also dissolved our partnership and awarded me 100% ownership of Mitchell Walsh Accounting. 6 months later, I sold the firm. Harbor Financial Group had walked away during the lawsuit, but I found another buyer, Riverside Accounting Partners. They offered $2.8 million, less than the original Harbor deal, but still substantial. I accepted. After paying off the firm's debts and legal fees, I walked away with $2.3 million, more than enough for retirement. Derek's assets were liquidated to pay the restitution. His house, his car, his investment accounts, all sold. It covered about $420,000 of what he owed. The rest would be paid through wage garnishment for the next 20 years, assuming he ever got a job after prison. 1 year after the trial, I received a letter from Derek, sent from federal prison in Lompoc. "James, I don't expect forgiveness. I know what I did. I stole from you, from the company we built together. I lied. I concealed. I betrayed 15 years of partnership. I tell myself it started small, a few expenses I shouldn't have charged. Then it became easier to justify, easier to hide. By the time I realized how deep I was, I couldn't stop. I owed money I couldn't repay. So I took more. I destroyed everything for $808,000. I never even got to keep. I think about the firm every day, about the clients we served, about the reputation we built. I threw it away. I'm sorry, Derek. I read the letter twice. Then I filed it away. Carol and I spent that winter in Italy, Tuscany, Rome, the Amalfi Coast. The trip we dreamed about for 40 years. My retirement was smaller than I'd planned. The lawsuit had cost me $400,000 in legal fees and a lower sale price. But I still had enough, more than enough. And I had the satisfaction of knowing I'd fought back. Derek had thought he was clever. Offshore accounts, shell companies, fake invoices. He'd built an entire system to hide his theft. But he'd made one critical mistake. He'd forgotten I'd spent 20 years as a forensic accountant, finding hidden money, tracing fraudulent transactions, exposing embezzlement schemes. I'd built a career uncovering exactly the kind of fraud Derek had committed. And in the end, that made all the difference. 40 years in accounting taught me one lesson. The numbers always tell the truth. Derek tried to hide behind fake companies and false invoices, but the numbers didn't lie, and neither did the evidence. The end. Story length. Approximately 5,200 words, 32 minutes at 160 words per minute. Genre: reality reversal revenge/justice story. Target audience: 60 to 70-year-old male readers. Platform: YouTube long-form video, podcast, audiobook.